evening. My name is Leta Ekanjo, and I'll be taking you through payroll and monthly SARs returns. Firstly, we'll go through the content. Unit 1, which is basically about bookkeeping and VAT. And Unit 2 focuses on planning, organizing, implementing, monitoring, and working with the payroll environment. And Unit 3 focuses on recording and valid input variations on employee records. As payroll is all about employees within the organization or within the business. Unit 6 is all about complete PAYE documents, and PAYE simply means pay as you earn, which is also applicable to employees as a form of tax. And Unit 7 is accounting for payroll. Unit 8 is computerized payroll. Unit 9 is monthly South African revenue reserves and e-filing. And Unit 10 is ethics and the registered tax practitioner. Unit 1, basic bookkeeping and VAT. Basic bookkeeping simply means recording transactions in the business books to give meaningful information, as information is only meaningful if it's put to the best use. If information is being used in a in the right way, that's the only way we can find out that the information is meaningful, which has to be done by means of bookkeeping or record keeping. Unit 1 also focuses on source documents, which are the documents that you use in a business when you are recording transactions. Source documents used can be tax invoices, which indicate that sale of goods and services has taken place. It can also be a tax credit note, which records the cancellation of sales regarding to the payroll in a business now, and the cash slip, which record the cash receipt in case no VAT should be charged. And the journal voucher, which is a source document from which transactions are recorded in the general journal. And we've got subsidiary journals. These are the books of first entries in which we record our transactions, as we said, as we're talking about bookkeeping. So the subsidiary journals are the ones in which transactions are being recorded. We have got the cash book receipt, the cash book payment, the debtors return journal, the creditors return journal, the debtors journal, and the creditors journal, as well as our general journal. Let's focus on the general ledger, a book in which business transactions are ultimately recorded. And owner's equity. A general ledger consists of three components mainly, which is the owner's equity, the assets, and the liability. Owner's equity refers to the owner's possessions into the business, and assets refers to the belongings or possessions which the business acquired, and liability refers to the debts or owings that the business owes to other businesses or people outside the business. Liabilities mainly contain incomes and expenses, and incomes are all those items that are only depleted within a year and you can never get them back. They are being used in generating revenue as well. And income refers to the money that is coming into the business. And example of income are rent received. I was talking about the subsidiary journals in which we do our bookkeeping. And number 3 was supposed to be, N is the Petticoats journal, in which we record the purchases from the Petticoats box, and the source document is an original invoice as well as the cash slip. Number 4 is the creditors journal. Type of transaction recorded are those transactions, credit purchases transactions only, and the creditors allowance journal we only record creditors, goods retained on credit, and the source document is an original credit note. And the debtors journal, we record the credit sales of goods, while the debtors return journal, we record the return of goods by debtors, and the source document is the duplicate credit note. So that we give them a duplicate credit note so that the accounts, the debtors account as assets will be credited. And by crediting them means we are decreasing their account. There's also a general journal in which we record sundry transactions, and the source document is the journal voucher. Okay, and we got the general ledger, a book in which business transactions are ultimately recorded, and which consists of owner's equity, assets, and liability, and incomes and expenses for part of owner's equity, capital, drawings, cost of sales, interest expense, interest income, the offer part of owner's equity, as well as assets, which consist of current assets and non-current assets. And our current assets are like furniture, equipment, vehicle, land and building, and fixed deposit. While our current assets have got stock, inventory. Stock or inventory is the same thing. Bank, data, as well as prepaid expenses. And our liabilities also have current liabilities and non-current liabilities. Non-current liabilities are like long-term loans. Let me say a loan for 10 years is not to be classified as a short-term loan, but it's a long-term loan, and it's a long-term liability as well. As well as mortgage loans, they are long-term liabilities, and current liabilities are like short-term loans, bank overdraft, as well as creditors. They are all our current liabilities. And typical duties of a payroll administrator include processing of salaries, which might include overtime, normal hours worked, and outsourcing. Calculating of allowable deductions also falls part under the duties of a payroll administrator. Handling payments to bargain councils and provident funds, and the IUF. The payroll administrator also process leave applications and seek record of the leave days taken. Must also record personal history, ensure timely payment of salaries. So the payroll administrator must not delay salaries, because everyone in the business relies on them for this when it comes to salary payments or wages. Handling tax certificates and the returns as well is also part of the payroll administrator's duties. Important issues a payroll administrator needs to deal with. A payroll administrator needs to deal with training and the resource allocation. You must calculate how much money they would be able to do payroll in-house. So how much money will the business be able to do payroll on its own compared to outsourcing or hiring an external firm? As well as resources must be provided to facilitate completion of tasks. So the payroll administrator must also be able to administer resources to ensure the completion of tasks or an activity in a business is completed within the planned time slot. And must also change management. Changing management simply means it's a planned way to ensure ways of working are understood, accepted, and applied by all responsible and affected employees in an organization. Types of incentive schemes. Individual incentive schemes, which is based on production or amount of output. It is based on the amount of goods and services an individual produced or worked, maybe in a day or in a week or in a month. It depends on what skill it's being used by the firm. And types of payment can be piece rate plans, standard hour systems, individual bonuses, as well as suggestion systems, whereby employees will be suggesting what type of incentive they would like to earn as in a firm or as a group of employees. Then we got sales, commission plans, merit awards, merchandise and travel incentive can also be given in the form of sales. When an employee sells goods, they can be given commission, which is based on the amount of goods that the employee will be like selling. Let me say if the employee sells if the agreement is per like, if you sell two of the items on offer, then you get 25% of your salary as an incentive. As well as merit awards given to those employees who are good at work, as well, and merchandise and travel incentive is given to those employees who mainly travel on a daily basis or as part of their workload, so they are given a travel incentive. Okay, let's continue. We've got also management incentives, which can be bonus based on work-based performance. Deferred compensation as well can also be part of management incentives, as well as share options. When you buy shares in a business, so you'll be given options of buying them back maybe at a lower price compared to the price of which you acquired those shares. It's to be taken as an incentive, as well as supplementary benefits. Let's look at the group and organizational scheme. Bonus based on group performances, gain sharing, profit sharing, employee share, ownership plan, skill-based pay, and suggestion systems. These are forms of organizational schemes which are shared by an organization as a whole. If there is bonus based on a group performance, then that bonus has to be shared within members of that particular group. Or if there is gain sharing, when the business makes a gain but not a gain on a certain sale maybe, then that can also be shared in the organization as a form of a group. Then profit sharing can also be shared. Profit can be shared in a group as well. That means if the business makes a profit, then it can be shared by everyone in the business as a motive. And employee share ownership plan, whereby employees own shares, then they benefit as a group. Then they benefit as a group of employees in a firm as well. Then there is skill-based pay, as you said already. Then let's look at Unit 4, 5, and 6. The basic conditions of employment, which outline the main stipulation of the Basis of Employment Act number 11 of 2002. The basic condition of employment also entails calculating and explaining normal time and overtime, as well as the opportunity cost of each and time of working. And normal time refers to the ordinary hours of work, while overtime refers to when ordinary hours of work are extended. Normal working hours are 40 ordinary hours in a week, or at least 8 hours. 8 working hours per day. Let me say from 7 o'clock in the morning or 8 o'clock in the morning to 5 o'clock in the evening. So the normal working hours. In a day, they should be 8. Then in a week, they should be at least 40 hours, ordinary working hours. So if these hours, if the worker or employee work more than 40 hours in a week or more than 8 hours in a day, the excess of those hours is what we refer to as overtime, which is also being paid. The duties of the employer. The employer must maintain good working conditions for employees. The employer must also provide employees with a written document which contain particulars of employment. It's simply more like a contract which stipulates what the conditions of employment are, how long is the contract, and when will, and what is part of their job description as well. The employer must also hand out pay slips every time they are paid as proof or evidence that they are being paid fairly. Maybe some employers do discriminate according to race or color, so they should always give pay slips as proof of evidence that yes, they were compensated for the work they have done. Then conditions of employment must be displayed in the workplace, so it will be more like a sound system to everyone that it's clear what the conditions of employment are, what the terms of the contracts of employment are, if they are being displayed in the workplace. There won't be confusion or misunderstanding, so everyone will just understand the conditions of employment. And skills development levies, it came into effect in order to develop the skills of the Southern African workforce and to encourage workers to participate in training programs. They also help in assisting the unemployment employees to find employment, and also to provide and regulate employment services. These are the Skills and Development Levies Act, which was established some years ago to assist those employees who cannot find a job, and also to provide and regulate employment services within Southern Africa. Compensation for Occupation and Disease Act. This provides for employees to be compensated for injuries and disease directly from the from the workplace. As some employees are working in a very risky environment, let me say in a mine or in a dusky area, like a construction site. So those employees have to be compensated if they happen to be injured or they happen to be sick or anything that might affect their health. They have to be compensated. Then they also have to be compensated medical expenses. Going to the hospital every now and then, it's very costly, so the company or the business must pay the employee medical expenses, and wages while the employee is incapacitated. So while the employee is unable to work for the time being that he or she is sick, so they have to be given wages and part or whole disability payment. Or if the employee is disabled, unable to work anymore, then they have to be paid, compensated as well. And death benefits to the next of kin. So in unforeseen circumstances or unfortunate events, so if the employee happen to die, or they have the next of kin or the family members have to be compensated for the loss of their family members. Employee tax. Employee tax is also known as PAYE, which simply means pay as you earn. It's a withholding tax and tax that the employer deducts from employees' gross earnings at the end of every salary or wage cycle. The balance of the remuneration. The balance of remuneration is calculated as remuneration. The balance of remuneration is calculated as remuneration. Let me say it's salary. Salary is your remuneration. Then you add bonus. Maybe it's your birthday month or your 13th check. Then you add overtime. You work more than normal working hours. Then you add leave encashment when you're on leave. you get compensated too. That's also part of your salary. Leave, encashment. Then you add medical aid. Then you add medical aid. Medical aid also is also part of your salary. Then you add those allowances, housing, the allowances like for housing, cell phone, computer, car allowance, car, PC. So these allowances, 100% of them should be added to your salary as your benefit as well. Then we come to the end of our slide for today.